Evan Niu. We're doing Tech Teardown for Friday, January 24th. Let's get right to our first headline. Software giant Microsoft reported earnings yesterday after the market closed, and shares are enjoying gains today. How did Microsoft do last quarter?
So it was actually a pretty good quarter. Revenue came in at $24.5 billion, earnings per share of 78 cents, and both are above expectations. Commercial licensing was actually doing, putting up a nice gain. And they're also having some progress that, really transitioning towards the whole devices and services vision that Steve Ballmer has. Let's see, hardware businesses are growing. We all know they launched the Xbox One last quarter, sold about 3.9 million units.
Is that a good number?
That's a pretty solid launch. I mean, it's pretty much in line with how Sony's doing with PlayStation 4. So they're both being pretty much neck and neck. I think there are a total of about 7 or 8 million total next-gen consoles sold last quarter. So Microsoft is definitely getting a good chunk of it. Surface revenue more than doubled sequentially to about 893 million. Guidance, which doesn't include Nokia at all. Let's see, revenue 20.5 billion in the current quarter. So overall, pretty good.
You mentioned the Surface. 2013, the Surface was a real drag on Microsoft. They had that nearly $1 billion write-down. It was kind of a disaster. How's it doing now?
It's starting to improve a little bit. I mean, Surface still loses money. So in the 10Q, Microsoft said that Surface cost of revenue was $930 million, which is more than the revenue. So it's still operating at a negative gross margin. An analyst actually asked about this on the call. They're saying, what kind of volume and scale do we need to get to before Surface could become profitable? And CFO Amy Hood kind of dodged the question, didn't really address it. She said Microsoft still just keeps on focusing on innovating forward and kind of moving ahead and kind of setting the example, which is really what Surface is about, is setting an example for other OEMs, but didn't really address the question of can Surface be profitable. Microsoft doesn't actually break out product mix, which is what I'm most interested in, because if they had about 900 million or so in revenue, there's a pretty broad price range between Surface. It goes from 300 to like 1,800. So I want to know what kind of product mix there. Like, what are people buying?
Right.
If we look at an average selling price, for example, of 500, that would imply they sold about 1.8 million units. Average selling price of 700 would be about 1.3. So we don't know where this mix is, but I think that right now, since Surface is in this early adoption stage, unit volumes are pretty important. We don't know how many people are buying these things.
What about Windows Phone? That's really key for Microsoft, too, as they're moving to mobiles.
So they did say that Windows Phone revenue increased by 340 million, which is a pretty nice increase. But also remember that includes their money from the Android licensing and patents. So in the past, I looked at the numbers, and it kind of suggests that most of their gains in terms of revenue are actually coming from these patents as opposed to the actual Windows Phone licenses. They're still really focusing on Nokia, trying to get that closed. They expect that to close this quarter. But analysts also were asking, hey, do you guys still want to pursue these non-Nokia OEMs? Again, kind of dodged the question, but they're still very focused on trying to get Nokia closed, and then they're going to start expanding, even further.
What do you think about Microsoft overall going forward?
I think right now this is definitely a solid quarter, and they're definitely making progress. But there's a couple of things overhanging right now. Right now, still no update on this new CEO, which is a pretty important thing on who's going to lead this company. So that's kind of a big uncertainty going forward. I think another thing is in April, there's a couple of things coming up. Windows XP end of support is on the horizon, so might see some more enterprise upgrades. But also, Microsoft is doing their build conference in April. They're going to preview Windows 9, and that's a pretty important release because, as we all know, Windows 8 has not really done very well, has not been received. And Windows 9, maybe they'll try to get away from the branding and also really tweak some of these interface changes they've been trying to pursue, which haven't really worked too well. So I think that there's a lot to look forward to in the next couple months, especially on the CEO front.
All right. Earlier this week, the Wall Street Journal reported that Apple is releasing 2 iPhones this year with larger screens. This isn't exactly new information, but it is more evidence from a reputable source about the larger iPhones. What do you make of this news?
Right. Wall Street Journal generally does have a pretty good track record. They've lost some of their top reporters to kind of gone off on their own, but they generally have well-placed sources and usually have a good kind of pulse on things. So the report says there's a 4.5-inch model and a 5+ inch model in development. The 4.5-inch is reportedly further along in development, which also makes sense because I think that's more of a mainstream display size. Both of these are expected to use metal casings, not plastic, like in the iPhone 5C.
So you mentioned that they said they're scrapping the plastic case. What do you think that means for the 5C? Was the 5C not a success?
It's not too clear on what they meant by that in the report, but I think it does suggest that Apple is possibly moving away from the plastic casing after trying out the 5C. There's been no shortage of reports over the past few months that the 5C doesn't sell too well. But the good news for investors has been like, oh, hey, maybe that's shifting the mix towards the higher end 5S, which is higher margin, higher sales prices. So that's good news for investors. But at the same time, if you look at the way Apple kind of looks at things, that they always talk about all they care about is the great products. And if they have a product like the 5C that maybe is not doing as well, maybe consumer demand's not where they want it to be, and it's not like a great product in Apple's mind, they would probably kill it. And even if regardless of any financial implications. On these two bigger phones particularly, they're higher end devices, so you'd also expect them to use more of a premium metal casing than they already do in the 5S.
So shares rallied on the report, so investors obviously like this news. Do you think a larger iPhone is a good thing? I
think that investors have been waiting. Investors have been calling for this for a long time. And when the 5 and 5S came out with 4-inch, everyone was like, hey, we need bigger, we need bigger. I think that there is a case to be made that they need to do this. Larger phones are getting larger. Just people are trending towards these bigger devices. It's a growing portion of the market, and I think they need to address it. I think it's totally fine that they've waited as long as they have. I don't think that they needed to do it last year. But I think this year is kind of probably the perfect time. 2015 is probably too far away to wait. But they also want to put pressure on Samsung. I think that this is definitely the right move to make at the right time.
In other Apple news, Carl Icahn continues his fight for an increased buyback. He's now issued an open letter to shareholders. He's trying to rally the troops. What'd you think of this letter?
So he tweeted earlier this week that he's boosted his position by $500 million to about $3.6 billion. Calls Apple a no-brainer investment. Put a 7-page letter out there that he notes that the S&P 500 trades at a 71% premium to Apple, which he calls a dramatic valuation disconnect. And we might also remember that Apple has recommended shareholders to vote against his proposal at their annual meeting that comes up in February. So he's really trying to get there and take the opposite side of that ahead of this meeting, trying to get everyone on his side on this buyback. He's a little bit annoyed, you can tell, because he calls Apple the most overcapitalized company in corporate history, saying that they have $130 billion in debt or in cash. They're doing disservice to shareholders by not buying back. He's making a
fighting words.
He even takes this passive-aggressive tone at some point. He's like, oh, well, we're still buying at these prices, even if you're not, so we should actually thank the board for keeping shares. It's this really funny letter, and I recommend all investors to go read it, all Apple shareholders.
Well, so the bear case, we've heard a lot more bears being a lot more vocal about Apple in the last couple of years. What's Icahn's defense of Apple?
So even though Icahn's not really historically a tech guy, he still believes in Apple a lot. He notes that they have. He thinks that they can maintain margins and pricing because of their unprecedented or unrivaled loyalty among customers. We've heard all this talk about saturation and price pressure from these low-cost players, but Icahn's actually pretty optimistic that Apple can defend against these competitors, especially like Google and Samsung and these Chinese OEMs like Huawei or Xiaomi's also rising a lot. But he thinks that they can also get into the TV market, which obviously everyone expects that at this point. He thinks they're going to do a ultra high def TV. He thinks they can do $25 million a year at $1,600 each. So he thinks they can bring in about $40 billion in revenue annually, and that's something that the street's not even modeling for. He still believes in Tim Cook as a CEO too. He's amidst all of his fighting, he has never called into question Tim Cook's leadership.
What do you think of Icahn's proposal, though?
I think it's pretty. If you remember, he first started with this whole $150 billion buyback when he first kind of started this rampage.
It was a little over the top.
And
yeah.
That number is enormous and probably too much. But he's kind of come down a little bit, saying, hey, we want you to do $50 billion this fiscal year, at least $50 billion, and noting that Apple makes about 40. This year, they're expected to bring in about $40 million in earnings, so they can clearly afford this, and they have so much cash that he's like, why are you guys holding on to all this cash? It just doesn't make any sense. You can cover all of your liquidity needs, your R&D needs. He also had this really interesting statistic that he said that over the past 17 years, Apple has only spent $7.8 billion on acquisitions, which is kind of crazy. That's a really small
really low number. Yeah.
Look at Microsoft and Skype. That was one acquisition was $8.5 billion, and that's already more than Apple has spent in almost 20 years. It just kind of shows that Apple's capital needs aren't as great as maybe it likes to say they are. So it really just needs to stop hoarding. So I think that I think $50 billion this year would make sense if Apple decides to do it.
Wireless chip giant Qualcomm has agreed to acquire various phone-related patents from Hewlett-Packard, including intellectual property from Palm. What's going on here?
So no price was disclosed on it, but Qualcomm is buying about 1,000 patents from Hewlett-Packard. And you might also remember that John Rubinstein joined Qualcomm's board last year. And John Rubinstein, of course, led Palm and WebOS, and was all kind of his baby. Like he really was trying to get it out there, and it didn't really work. But kind of a funny angle where maybe he's pushing for recommended Qualcomm to buy it. A large part of this is that Qualcomm's business obviously is a lot of it is like IP and licensing, and they have one of the strongest patent portfolios out there. So this really just kind of adding to the mix, just kind of beef it up, and also might be a little bit of a defense play because they might want to stop these patents from going into the hands of someone else, maybe like a patent troll that might just kind of use them against Qualcomm and other companies. So, but I think really here it's probably more about HP than Qualcomm.
Why do you think?
So I mean, if you look at there were reports last year that HP was actually looking to unload these patents. I think back in October there were some reports about it. So I think that HP has probably been shopping these around, and Qualcomm was probably just like, sure, why not? We'll take some more patents. But I think HP just want to unload it, raise some cash. Meg Whitman has been talking a lot about really kind of getting rid of all these distractions and focusing on the core business. And Palm was like the definition of a distraction for HP. I mean, it was.
They just want to put that behind them now.
Nothing good ever came from that. And I mean, they sold WebOS to LG last year to put in TVs. But yeah, I think this is really more about just HP trying to like get rid of all this other stuff.
So HP is just basically cleaning up.
Right.
Cleaning up after.
Yeah, more or less. And I don't think there's a whole lot of cash here. I mean, it's probably less than $100 million we're talking about. But it's more just like another way to just, I mean, every little bit counts when you're in this full turnaround mode, trying to save money, trying to get rid of stuff you don't need.
All right. Facebook has been riding high on mobile success. The company is now preparing to roll out a broader mobile ad network. Should investors be excited about this? Is this big news? I
think so. I mean, it has the potential. I mean, right now it's a very small test, but I think it has some pretty important long-term potential. So Facebook, I think it just shows that Facebook's ad business is really starting to mature. Mark Zuckerberg is certainly starting to mature as an executive, but I think that right now Facebook's ads are shown only on its site in mobile ads or in its mobile apps. This will roll it out to third-party apps, and I think it really provides us a new platform for developers to make more money on. It's still testing again, so it's still kind of a small-scale thing, but I think that definitely has a lot of potential. If you look at it, it's basically a whole new distribution channel for Facebook. So even though ad networks tend to share revenue with their partners, it's still all incremental upside for Facebook. So it's really just like there's no downside to trying it out at least.
So this seems like it's a pretty clear shot at Google's AdMob. Is this something Google investors should be concerned about, or is this just noise?
To a certain extent. I mean, it's definitely a threat to Google. And also Facebook is very directly targeting mobile. So, I mean, they're not focusing as much on the desktop side of it because Facebook is all mobile nowadays anyways. But, AdMob is still one of the largest ad networks out there on mobile. But at the same time, they've also been kind of starting to decline in market share because there's tons of new entrants coming in. And I think a lot of developers kind of perceive as AdMob as and they kind of associate it with these old school traditional mobile banner ads, which aren't really interesting. And I think nowadays, consumers and developers need more engaging content that's a little bit more interactive, a little bit more immersive. So I think that that might also be Facebook's angle here, is to kind of get better quality ads out there, expand the network. I mean, most of its ads now, or some of the ads now, had the like, but there's more like a call to action as opposed to just like a banner ad, which people tend to ignore. But
right, it's not engaging.
Right, so I think that Facebook has a lot of opportunity here, and I think that starting a mobile ad network is definitely the right thing to do. In the long term, I think it will probably pay off.
That's all for today on Tech Teardown. Want to hear more about the tech stocks we're investing in? Just send an email to cto@fool.com and you'll receive our special free report on the one social play our Chief Technology Officer loves. For Evan Niu, I'm Erin Kennedy, and we'll see you next time.